I hope we have a DJ next time so we can tune the music. All right, thanks for everyone come to join our ADU and financing events, co-hosting with Noah. Let's get started. Let me share my screen so everyone can see it. Cool. Morning, everyone. So let's kick off our events. Today, I'm gonna be speaking. I'm the CEO and founder at Eano.co. We are a home renovation company. And like Amy from like Noah's team, she's gonna be speaking as well. So he was like running a little bit late, so maybe he join us later. Right, so today our agenda will be, we're gonna talk about like why and how we're gonna build the ADU, and also I know most of you guys are interested in like how do you invest and get like positive ROI out of like ADU. We're gonna touch base on that, and then like Amy, she's gonna talking about like the debt focusing financing options for the ADUs. And then by the end, we're gonna have a Q&A session. So for those who don't know who we are a VC-backed construction tech company in the San Francisco and Los Angeles as well. And since last year, we already have like 100 ADU and renovation projects. Half of them are already done. So feel free, if you wanted to come to our on-site visit, feel free to book appointment. And today we're gonna focusing a lot on like ADU specifically. So basically we'll provide a turnkey solution for the clients who are interested in ADU construction. We have our in-house designer who can help you do the design and also permit process. After that, we have like a constructions contractor team, GC team, and also we have like our self-developed app to help you take care of the materials and also like communication as well. So basically it's a turnkey solution for the people who wants to like do ADU but don't know how to start it. So here are the projects we already complete in the past. There's some like a bathroom, kitchen remodel, and also like if you look at this one, this is the garage, the new garage we built in San Mateo. And Daly City and San Jose, so all this area covered. Okay, so now I handle to Amy. She's gonna talk about like introduce her company.
Hi, thanks so much, Stella. So I'm here today to talk about Noah. Noah offers essentially a modern debt alternative for homeowners. Our mission is to help all of you homeowners maximize your homeownership experience and be able to tap into that equity to live the lives that you aspire to. Next slide. So to date, Noah has funded over 230 million worth of homes. And we offer something called a home value investment that I'll share more details on. But essentially, rather than take on additional debt, Noah will make an investment in your home and provide funding to you to pursue projects like ADUs. And today we're available in 11 states, including, of course, California and Washington, D.C.
So many of you wonder like why building an ADU. It's actually, there's so many benefits about like building ADU. First, you get extra living space, especially right now during the COVID. A lot of people need like a home office. That's an option. And also like increase the property value by 30% when you're trying to resell the house, increase a lot of value. And another option is like for the rental. A lot of people like, for example, myself, I built an ADU back in 2017, and then right now it's giving me like passive income, like $3,000 per month. So it's a great way of investment. It can totally cover my mortgage right now. So that's why I can do my startup right now. So there's a two-way of the ADU. One is like the traditional, like a lot of like people in the market right now is providing a turnkey solution for like the traditional build, like the first picture you're seeing, like the building from ground up. You can choose different kind of materials. Is really good for someone who interested in like rental, because you can choose like a slightly more economical like materials to make ROI positive. you can build the floor plan based on your lots, and it's more flexible there. And the construction time is like 4 to 7 months. And there's another options which we done a co-marketing event with the Mighty Building before. They provide the prefab ADU. So basically it's a very like luxury type of the modular home. That's made a shorter time. But based on the finishing, it's a little slightly expensive. However, we also got a deal with Mighty.com, so Mighty Building, so we can add like very affordable finishing material there. So if you're interested, let us know later. So let's talk about the traditional build, which is mostly currently most people are doing this way right now, is that first you need to do a lot of like a foundation. Basically, after they need to dig in the drench and then put all the like silver line there, and then you do the foundation. Look at this. And then after the foundation, the framing, everything set up, then you need to work on interior, like the lights, fixture, electrical, and plumbing setup. And after that, you do the installation and also like the drywall, different kind of thing. After the drywall, then it's like the patching and also painting. That's the last step. So roughly the cost we provide here is based on what we past clients. So the ADU permits somewhere between like 7,000 to 12,000. It includes the schematic design and also structure engineer and also like Title 24, different kind of like a paperwork. So we take care of all of that, and that fall into that pricing. And then what we provide is also the labor and a rough material and actually a debris removal together. It's around like 250 to 300 per square feet for the detached ground up ADU. Of course, if you say the attached like a garage turn into ADU, that would be made way cheaper, because a lot of like this fee, the foundation is very expensive and the roofing, all those is very expensive. So this ADU estimate is based on like the detached ground up ADU and also like in San Francisco, because like different area, like LA is cheaper, way cheaper than this one. So you can see the details, the breakdown we were providing. And also as a homeowner for this type, we ask for homeowners to pick up their like finishing materials, because like if you wanted to rent out, you want to be like as affordable, like economical as possible, like the finishing material, including like a toilet, bathtub, all those kind of things. You can pick up at Home Depot at a really affordable pricing, or like you can go to like a super high-end store like for self-living, right? So the custom made giving you that kind of like a flexibility there. So today, like for my example, like I was building an ADU for renting, so I only spent like for my my ADU is like basically a junior ADU, like converted. So the total cost was around like 60,000. However, I built like around like a 500 square feet like ADU, and then I live in Daly City. Right now it's generating the like 3,000 like renting for that additional part. So here is a breakdown. If you can look it up later, say like what given how much like square footage, how much money you can make from this basic reference. So now I handle to Amy. She's gonna talk about how focusing on the debt focusing financial options.
Yeah, so you know, there are a few ways that homeowners have typically financed ADUs. One way is through personal loans, which of course is taking on additional debt. Today, those have an interest rate that varies between about 14 to 25%. And those rates go to people typically with a 670 credit score or above and have 1 to 5 year sort of payoff durations. Of course, this does mean additional debt in your debt to income ratios and will require monthly payments. A second way that many homeowners research to pay for ADUs is to actually tap into their home equity and take out a home equity loan. This, of course, is debt. Today, rates are ranging between 3 to 21%, but the feedback we're hearing in the market is that banks have really tightened their home equity lending. So many folks who are interested or have been unable to secure them recently. Those have a 5 to 15 year duration, and of course, adds to the debt that you owe a bank or other financial institution and requires a monthly payment. And there are those brave souls who finance their ADU on a credit card, which I highly do not recommend, with interest rates ranging from 15 to 25%, and of course, revolving debt that you must service. It often has an impact to your credit score, and again, increases the monthly payments that you have going forward to detract from the benefit from that additional rent, perhaps, that you're taking in. So let me transition to share a little bit about NOAA. NOAA operates a partnership-based funding model, which essentially means that we invest in your home. So rather than taking on additional debt, NOAA would provide up to $350,000 in upfront funding based on the value of your home and any additional, any current debt that you have on the home, essentially in exchange for a share of your home's future value. So you would receive up to $350,000, and you actually make no payments to NOAA for 10 years. You can use the funding to construct an ADU, make home renovations, pay down other debts, etc. And you have up to 10 years, essentially, to pay NOAA back. And we both win because we share in the future value of your home. And when your agreement ends, you can either, some folks have sold their home, others decide to refinance their home, or use cash or other assets to buy us out. And we share the upside as well as the downside risk. So in the rare case your home is actually depreciated over those 10 years, you actually end up owing less to NOAA. It's a very simple process. You can get pre-qualified online at noaa.co. You complete a short application, and we can fund our customers in as short as 15 days. And here's a quick case example. So Gary and Janet were actually customers of ours in the South Bay. They had debts mounting and an existing home equity loan that had very large monthly payments that they owed, yet they needed to invest to make some needed home renovations, which I think included a new bathroom and a new roof. They received $80,000 in funding from NOAA, and they were able to, again, have a 10-year period with 0 monthly payments. They used some of that funding to pay off some high interest debt like that home equity loan. They invested in the new roof and the bathroom on their home, which increased their home's value, and actually managed to even stash some funds for an emergency fund, but essentially allowed Gary and Janet to increase the value of their home with this sort of debt-free financing from NOAA. Stella?
Oh, I mean, for this one, it's like basically how we gonna work together, right? So basically, Amy, can you tell people, like, for example, if we say the ADU cost is like $150,000, and then the how, like, the homeowner gonna work with in this case, like how much they need to exactly pay. Can you use this to?
Sure. So here's an example for those of us that are sort of in Northern California. Let's say your home is worth $1.2 million today, and you have a total ADU cost of $150,000 to build that accessory dwelling unit. Sounds like it would be a really nice one. Essentially, NOAA can fund up to $175,000 investment in your home for a 20% stake in the future value of your home. That means you can fund the ADU for $150,000 and essentially take $25,000 to do what you will with, whether that's pay off additional debt, put it in a rainy day fund, etc. But what that means is for the period, that 10-year period, you're saving about $24,000 a year in payments that you are not making to a financial institution. And during that time, you can collect at least $1,800 a month in rent for that 400 square foot ADU that you've built, which means $21,600 in income that you're keeping and either investing or in other areas of your life or savings. Now, 10 years from now, what does that mean? Well, in 10 years, and this is probably a conservative estimate, your home has reached a new value of $1.5 million. Your share of that value is over $1.1 million, and you've received over $500,000 in both rental income and savings over that time. At that moment in time, Noah's share is $392,000. And again, if for some reason your home has depreciated or is worth less, Noah receives less.
Oh, hi. So hell, you'll be able to join in time. You melted. Yeah. You melted yourself. I can't hear you.
Yes, like I was going to say, I'm sorry. You know, as I mentioned to you, we had an investor call, and that just he kept going on and on.
No
So
worries. Amy is amazing. She's
which is why I already told Amy that, hey, if I can't join, I expect you to kind of lead the charge here.
Yeah, so she's been giving us examples as we mentioned earlier, like if the home value is 1.2,
Okay.
how exactly the homeowner will pay out.
Okay.
When we introduced Noah to our customer, like
yep.
They also ask like, oh wait, what if I sell the home in 5 years, not in 10 years? How much do I pay? Or like, you know, and those kind of things. If I wanted to keep my house in 10 years, like things like that. So Amy's being answering on there. And also like just to mention, Noah also created this like a calculator on their website. So if we wanted to know exactly, it's better you can visit their site and then you can figure out. And also you can ask Q&A in a Q&A session, like Sahil and Amy, they'd be able to answering you. Okay, so let you continue.
Yep.
So who is Noah a great solution for? Our customers really love that they have this 10-year period where they can preserve their cash flow because they're not making additional monthly payments on debt. We work with many homeowners who are either self-employed or have a small business. And again, we share that upside as well as potential downside risk with you. So we think of this as a true partnership. And people like that they can access funding in as little as 15 days, which is much faster than traditional financial institutions operate. So in terms of our eligibility criteria on noah.co, you enter your address and you'll find out if you live in a Noah neighborhood. We have many, great coverage of the Bay Area, as well as throughout California and our 11 states. Your home needs to have a minimum value of $400,000. You should have at least 20% equity in your home and good credit, and up to a 60% existing debt to income ratio. And today we're very proud of our 4.6 star rating on Trustpilot, that customers really have enjoyed the process of working with us.
Nice. Okay, so you hear about all the financial options. So why choose us to do ADU? First, we are the turnkey solution, and the other, we are a tech-enabled service. When you're doing the ADU, we'll have an in-house app to support you doing all the materials and also communication to minimizing all your work to do the ADU. And also we do like the quality control. We have 18 construction team all over the Bay Areas. In case one team has something happen, we still have the whole other team to be there for you. And also, if you're interested in modular ADU, also we have a partnership with Mighty Building. And if you don't have cash on hand, you still wanted to get the rental passive income, here comes Noah. So feel free to ask any questions in the Q&A session now. We can answer you in the real time. Okay, let's look at it. The Q&A right now.
Yeah, but I think one question that came in, Stella, was, is Noah's equity share negotiable? So the one thing I want to say is, I think at the end of the day, we all want to make sure that the pricing is fair and equitable to every homeowner who works with us. So, and the amount of Noah share, which is whether it is 10%, 12 or 15, it really depends on the financial profile of the homeowner and how much capital they are taking, right? So the single biggest driver of the Noah share is the amount of equity you want to pull out. So the more the equity you want to pull out, the higher the Noah share will be. But at the end of the day, I think you as a homeowner are in control, whether you take $20,000, $50,000, or $100,000. We are obviously very flexible. you can take as little as $30,000 from us. And in that case, then your NOAA share would only be like 5% or 6% on average as well.
Cool. Let me answer Andrew Pound's question. What differentiate compared to other ADU builders? That's a great question. I think the first thing is the technology enables, because we are building different sort of like internal tools and also like custom consumer facing app to help the homeowner and our contractors to increase their communication efficiency. And then we are really a vertical. We're not like a marketplace, say we're doing the lead gen for the contractors. We're really there to helping to improve the customer experience. When you come to us, you don't need to deal with like so many like different like contractors. We make sure the contractor will hit the quality there. And then, as I said, we outside of that, we have like a lot of like the contractor network. So in case one person that's not like you don't really like, or something happened to him, we still have the whole other like contractor team to be there for you. That's another thing. And also, as I mentioned, I started this company from my personal experience, right? In our community, there's a lot of like affordable contractors. Their pricing is like maybe 1/3 of the mainstream market. They know how to build. They have like over 20 years experience. However, they're really, really bad at communication and they don't have any project management skill at all. So we building that technology piece and also like the customer support piece to fill in, to combine with that affordable like labors. And that's why we are so different from people out there. We are really affordable, and also we have an excellent like customer support system.
Okay. Like a couple of questions on the financing side that I just want to make sure we answer is, there was one question which asked that I have a mortgage with another bank. Will that be okay with a NOAA investment? Absolutely. So NOAA generally is a second lien position on the house, assuming you have a primary mortgage. In the past, we have done transactions where the primary bank was everyone from Bank of America, Wells Fargo, Chase, to a private bank, to a credit union. We have never had any issues with any type of transaction. So no matter who your primary lender is, you can absolutely get a NOAA investment. So that was one question on the financing side that we just saw. And I think, another question on the financing side, somebody asked is that like a 20% share means 20% share of the whole value of the property. So yes, the answer to that is yes, that like when we say that, NOAA is going to take a 10% or a 15% NOAA share, it means our share of the future value of the property, essentially, right? It is the entire value of the property, but obviously say keeping in mind that majority of the gains are still going to you. Even if we have 10 to 15%, 85% of the gains of the appreciation, everything else is going to you. NOAA is getting a minority portion. And yes, NOAA will be a second lien holder. NOAA can also be a third lien holder. So in fact, we can be first lien, second lien, and third lien. It's not a problem. We have customers who have a mortgage, then they have a HELOC, and then they have NOAA. So we absolutely can do that as well. And like I think one question on EDU was that that does NOAA get to keep part of the rental income? No, I think that's the biggest thing, right? So we are not your lender. We are not the owner of the house. You own the house, you control the house, you manage the house, which means any income you get is all yours. And I think that's the beauty of this partnership with Eano and NOAA, is that Eano enables you to generate new income. NOAA enables you to generate the income and also keep that income. You only have to pay us out at the end of 10 years or whenever you refinance the house. And talking about refinancing, there's this question on, can you refinance? Absolutely. A lot of our customers have refinanced their homes. We normally will subordinate our lien to the primary lender. And we've done that many, many times over for our customers all across the country as well.
Okay, so here, let's follow one by one question.
Oh, I'm sorry.
There's a Q&A. Let's go through one by one.
Okay.
First, like what size the ADU is the price for? I think the price I list there is based on like the in Bay Area, and also like the smaller the price per unit, like per square feet, of course, it's going to be higher. But the detached ADU is somewhere around 250 to 300 per square feet, and the larger you build, the unit price will be lower. How long the builder time will be like 400 to 500 square feet detached ADU for rental, not including the permit. I think I list out there like a 4 to 7 months. That's just based on like the actual build time. So that doesn't including a lot of like waiting on the material or like waiting on the inspector to come. So those I exclude there. So I saw another person also ask, it seems like 4 to 7 months is quite fast, because I only count that as the real actual construction time there. And if you do the modular home, it will be much faster too. It's like a 1 month. However, you do also need to pay a lot more, like crane fee, and also like a foundation, a lot of fee there as well. From Mark, can NOAH be used for vacational property on new land purchase? Yeah.
So yes, so NOAH can provide the home equity investment on your primary home, your investment home, and your rental home. There is no limitation on that.
I see. And also, what size of the ADU can I build for 150K? I mean, a lot. Like, look at my case. I built the ADU out of like 60,000. I know it's heard of for a lot of people. I do spend a lot of time like sourcing different kinds of material, and I work like basically self-managing a lot of project myself. However, I think like you can use your basically like assume like 10K for permit or less for permit, and then like you can use that the rest of the money like split like maybe 30% of the money using to buy finishing material, and 70% you can use for like doing the actual construction. Just divide by like say 250 or something. The junior ADU would be cheaper, like if you garage convert, since there's already having framing and roofing, right? So my case is that case. But if you're really building the ground up, the cost will be higher. So, and what type of the home are eligible for home value investment from NOAH?
Yes, so we invest in all sorts of homes. So whether it is a single family, attached or detached, whether it's a condo, or or whether it is a townhouse, we do all of those homes as well. We do not do homes that are built on trailers or something. So if it is a movable home, that is not something that NOAH can invest in. But outside of that, all sorts of homes are eligible for NOAH financing. Mm-hmm. And as Amy mentioned, the minimum value of the home has to be about $400,000, and on the high end, about $3 million as well. Yes.
Okay. Also, there's a person asking, what's your advice on type of ADU to build for rental to maximize the rental income? I'm worried about building the detached ADU will make it hard to sell. To answer your question is that when you're thinking about building the ADU, also consider where you're living. I would not recommend people like in, say, Palo Alto or Burlingame, those like Los Gatos, those expensive area to build a detached ADU, because the rent you get there is probably not worth the property value increase if you build like detached or expand, because right, because the rent in Los Gatos or like Daly City or somewhere is probably gonna be the same. However, the property value probably increase a lot if you're willing to do a attached or expansion in Los Gatos. So it depends on where you live in. You can contact us if you want like specific advice. Okay. Do you work with other construction team? Will you work with my favorite general contractor? Yes, we can work with your general contractor, of course, because eventually we're building that product like a management softwares to increase that to bring up the communication efficiency. So let us know like who's your favorite GCs. We'd love to work with them as well. Hi Stella, I'm curious about what you mentioned about the rental income for the ADU. Can you talk about it? I'm considering to have an ADU and rent out for my parent, but little knowledge about the type of the ADU to choose. I mean, there's so many different types. The most common is the detached one. You have a separate entrance to go to the ADU. That's most expensive because ground up building. And there's another, which is junior ADU, which is convert your garage into something ADU. And you mentioned you wanted to, like, say for your parent, then I would recommend, say, the detached ADU, right? So you both have a separate, living space, very close, but also having some sort of privacy. And then, like, maybe in the modular home or like traditional build could be a really good option. Okay, what type of the what type of ADU can be built in 14 weeks? How many ADU would you build in 14 weeks? Yeah, that's a great question. I mean, depends. If you ADU, you already like a junior ADU. If you just convert, that's pretty fast. But like 14 weeks is really hard if you count the inspection time, right? Because you need to pass so many different inspections and like on the material lead time as well. So if you just say the construction, the actual build, it's possible. But if you're adding different factors, it's really doubt the quality though. How long will it take you to design my ADU? How long will it take to get the permit? So basically, after our on-site visit, we will, and then you sign with us, we will give your permit first draft within 2 weeks. And then after that, we will have like the design review meetings. And then how long it would take to get the permit, it really depends on the city, and especially right now it's COVID. So I would say put that like at least 4 months, 3 to 4 months. Will it be cheaper if I don't build one but convert my garage to ADU? Yeah, you can do that. It'll be cheaper, but it depends on how high it's a garage. Have to meet with the livable standard. Okay. From Grace, I live in a hill and backyard is not flat. Will prefab be possible? It depends, because the prefab, it depends because the crane needs to go there to drop the unit. How much does it cost to adding 2 rooms and 1 bathroom to my current house in San Angelo? Yes, we do a free on-site estimate. So if you're interested, just email us at project@eano.co. We will send someone to visit and give you a quote there. Yeah. For Noah, what if I decide to sell the whole property a year after the ADU was built using your investment? Can you explain?
No, so one of the benefits of us compared to a lot of other companies is that you have complete freedom on when, how you want to pay us back. So if you want to sell your home after a year, that's perfectly fine with us. We will just use whatever is the sale price is, and we will get our share of the sale price at the close of transaction via escrow. So keep in mind, there is no prepayment penalty. There is no early exit fees as well. And in fact, one of the things, we recognize that, life can happen, right? So you can be moving or selling within a year, within 2 years. We have also instituted a policy where if customers pay us out early, you actually get an early exit discount. So if you pay us back within 12 months, we'll give you 10%, it is almost like a cash back. So you get 10% cash back from Noah. If you pay us back within 12 months, if you pay us back, within 24 months, it is 7.5% cash back to you, to make sure that you are walking away with the most amount of money from the sale of your home.
Actually, can you give a little bit detail? Because I would like to get people understand better. Like basically, if the house is say like 1 million, and then like a year later they wanted to sell it, and the property value maybe 1.1 million.
Yep.
The person borrow like say 100K.
Yep.
How does that work? Like,
of course. Like absolutely. So I can give you that number right now.
Yeah. Like
yeah,
if you got like 100K to build your ADU, right?
Yes.
And like the property value is like 1 million.
Yep. And
1 year later, you sell it at 1.1. Assuming worst case, the property didn't increase that much, like it
yes.
just the add on. So how much does the client need to pay?
So I can give you an approximate answer, because as you know, the actuals in Noah share and percentage is different for different people. Okay. But let's say you take $100,000 on $1 million home, as Stella said, which would basically mean that say that the Noah share will be about 13%. 13% is what the Noah share will be. So then if the value of the home goes from $1 million to 1.1, including the 10% cashback discount we offer, your payment will be about $142,000 basically to us.
Oh, I see.
Yes. Yes, the 100,000 you will pay back 142,000, but the benefit is in those 12 months you didn't make a single monthly payment. You use that 100,000 to build an ADU, which hopefully is giving you 10, 20, $30,000 of rental income, so not just in the first year, but is also added to the value of the house from $1 million to 1.1. So think of Noah as a partner to drive a financial outcome of higher home values and more rental income for you.
Got it. Yeah. So if you don't have like a lot, enough cash in hand, but you want to get that passive income, that's a good option. But if the people has a lot of cash, do you still recommend it?
So I think no, right? So if you have a lot of cash to construct an ADU and you don't have a cash flow problem on a monthly basis, then you may not need Noah financing, right? We recognize that our job here is to solve a problem. If you have a cash flow problem, financing issues, or if you simply, a lot of people come to us and say, I want to build an ADU, but I don't want to use my money for it because I don't know what the future value of the house will be, right? So in many ways, Noah is paying for your ADU, you get the rental income, and if the home value goes up, then Noah benefits from it. If the home value does not go up, then Noah does not benefit from it. So think of it as a free financing option for your house as well.
You see.
Yep.
There's how many ADUs has Mighty Build and Build? How much do those ADU cost? If you're interesting, send us an email. I will connect with you because right now a lot of some of the number it's on their website too. But basically, you need to buy the module, and then also the installation fee is a separate fee, and foundation, those kind of thing. It's a different fee, and most people don't know that. So just ask us. We give you a quote from there. And Nora say, but you're using an example of giving out 175 for trending 20% of 1.2 million equity share. That's $240K. Is this more expensive than hard money? Can you explain?
Absolutely, right? So the one thing I'll say is that most hard money lenders generally have an interest rate of 11 to 14%. So if you are taking $175,000 from a hard money, at 14% interest rate, you basically have to pay them $24,000 a year in interest, which means you have to have $2,000 of free cash flow every month to pay the lender. And that also puts a lien on your house. And the hard money lender's loan they normally do 12-month loans, which means within 12 months, you have to come up with 25,000 plus 175 principals. So you need to come up with $200,000. The very reason that you are accessing money is because you don't have the money. If you had the money, then you don't need Noah and you don't need a hard money lender. So our biggest, and Amy mentioned this as well, this is a great financial solution for people who are cash flow constrained, who don't have access to, and the other thing is not all hard money lenders are lending these days because of COVID. So not all the banks are lending. So if you don't want to take on a loan, if you don't want to make a monthly payment, if you're worried about your future financial situation, then Noah is a great solution for you. If you have the cash in your bank, then please, absolutely, I would say go use the cash first, and then you can always come back to us a second time as well.
Cool. Have you done building ADU above garage? Yes, we have done that. From Grace, what's normal time including all the waiting time? Maybe like 12 months. I would say it really depends though, because like the different cities different, and also like depends on how big, how complicated is your project. Like some ADU, like my case, it was done in 4 months, but also before the COVID, right? So really case by case. Our average, you can think of like if it's a like converted, that could be easy. Then for to like detached could be more complicated than a year. Like within that depends on your case. Noah, what sets you apart from your competition?
Absolutely. So I think one of the things I'll say is that in the second quarter of this year when COVID hit, we were the only company in the space that was actively investing in homes and financing people. A lot of our competition actually stopped and paused investing because they were afraid of what was going on in the markets, and they were also concerned about their capital market. So Noah is extremely well funded on the capital market side, which means we have access to a tremendous amount of capital that we can finance and invest in homes, unlike our competition. The other thing I'll say is, if you know that Noah is able to finance transactions in 15 days or less, this is 50% faster than the next best company in our space. So similar to Eano, as Stella said, right? A big part of Eano is a digital platform that makes your life easier and takes the complexity away. That's the same thing that Noah does as well. The third thing, like in Noah's case also, is our ability to give you the best price. All things equal, I am very, very confident that our price of the equity share of the Noah share for you will be better than anybody else in the ecosystem as well. And I'm more than happy to match it. So if you have an offer from somebody else, firstly, it will take you a week to get an offer from them, and from us to get an offer in 60 seconds. But if you have an offer from somebody else, we can absolutely match it and beat it because we are confident in our pricing. And finally, unlike everybody else with Noah, it's not just about the transaction. So once you do a transaction, you actually get access to the Noah investment dashboard. So what that allows you to do is that allows you to manage your entire house, your entire home value, your mortgage, your future HELOCs, everything else. You can manage all of that from the Noah dashboard. So think of it like a lot of you, I'm sure, use apps, and you have mint.com or Credit Karma, which are like these are super apps. Noah ultimately is building a super app for housing. So you get the product, but you also get access to a super app for housing in the future as well. And that's what separates us from everybody else today.
Awesome. What do investors typically look for as the ROI for ADU? Actually, I'm not really understand this questions. Like, do you want to answer this?
What do investors? So I think as far as our investors are concerned, there is no ROI that they are looking for, because as I mentioned, we don't get a piece of the ADU, we don't get a piece of the income either, right? So there is no ROI requirement from Noah's perspective. And so I think the biggest ROI of the ADU is for you as the homeowner, right? As Stella and Amy mentioned at the start, you get to keep the rental income, you get to keep the savings, you get hopefully a bigger home value in the future, and you have one extra bedroom, bathroom, and kitchen for your family and and for your friends. So I am all supportive of the ADU concept, absolutely.
Yeah, I think I'm not really clear about what it's asking. Like, if you say like, what's the best choice for ROI? It's like when you buy the properties, you need to look at the structure, the layout, right? Whether it's good for building a pretty standard ADU, or it has to be like customized made, because more customized, it's gonna be more expensive. So yeah, that's things before you even buy the ADU. Keep it in mind. I periodically rent my property or room in my property. Does that income qualify?
Yes, absolutely. So that's another differentiator between Noah and the banks and Noah and the competitor. If you have rental income, Airbnb income, even if you just rent one room in the house, that income qualifies as gross household income for underwriting purposes. And the benefit of that also is that we have an expansive underwriting criteria. Up to 60% DTI is what we can finance. Most banks only go to 35, 40, 45 at best, right? So you are 2x more likely to be approved by Noah than a traditional lender, actually.
I see. But if I'm not selling after 10 years, who would determine the value of the house?
Yep. So it is the same. We do the exact same thing that we do upfront. We always do an independent third-party appraisal through an appraisal management company who comes to the house, inspects the house, and provides the valuation. And that is what we use. The one other thing that you have to keep in mind is if you disagree with the valuation, if you think it's too high or too low, then we can order a second home appraisal. And then we normally will take the average of the two to make sure that you are satisfied with the home value on the back end.
Okay. All right. So Frank, I've been looking my building as well. What's the value at what versus going directly to them? So we actually have a really close partnership with Mighty Building, because like Mighty Building, and you look at you know that it's really good for self living because all the things they're using is really like luxury. So the property, like the unit itself, is quite. I wouldn't recommend for rental people to use that because the overall is quite expensive. However, we also reach out to them to get a special deal just with us. Is that we take their shell basically, and then we can put in like the more economical things, make it to be more friendly for the rental purpose. Because that way we also like do the calculation as well. If you buy that and then do really affordable finishings, then versus the time you spend on there, like the opportunity cost for the rental, right? It's actually quite similar with the traditional build, and then you go through like less hassle. So if you're really interested, let us know. We definitely can kick off something for that if you wanted to rent out and do something like that. Also, questions like for opinion on the SB 1120 and also AB 69.
I would say thumbs up. Like I think that the more we can solve the affordability problem in California, I think that the more housing we get is great. I obviously recognize that, say, all of us, especially all of you homeowners, want home values to remain stable. But I believe the best long-term investment in home value is if we build new homes, ADUs, and construction in an incremental manner, it will maintain the supply-demand, ratio that we need, right? As with everything in life, if you go too far in one extreme, you break equilibrium, which is not good for any of us. So I personally think I think it's a great initiative by the state. Obviously, there is a lot of regulatory things that need to be tackled, and that is something I am not an expert on. So I will not talk about the regulatory component, but like as a consumer, as an investor, as somebody who works with homeowners day in, day out, 100% supportive of making more housing, making more affordable housing in the state of California.
Yes, I totally agree with Sahil. Like that's why we exist, because we wanted to make affordable renovation for everyone, literally. And also, I spoke with some the official governors, like from like San Jose and also like San Mateo. They really put a lot of effort trying to make affordable housing for everyone. They also create those like pre-approved floor plan. So if you're interested, I can send you some information later. Like literally, those like officials reach out to us, and then they set us some like hosting some events for like advocate this affordable like housing. So with us, like we are also trying to gather as many like affordable like really great contractors, and then helping them to adding the communication and project management technology layer to make it more friendly using and customer friendly for like all the homeowner, not just in the Asian community, but also all the people in the Bay Area and also LA. Is Noah added to the title of my home or make?
No, absolutely not. So Noah very much works. We are obviously not a lender, but the way we file a lien is the same way that a mortgage company would file a lien, which is a deed of trust in the state of California. We do not get added to title. We are not the co-owner. We have no ownership rights. We have no rights to stay in the home, and we do not intend to do that either. At the end of the day, think of Noah as a minority investment partner, a co-partner, a co-advisor for you, where you are in the driver's seat, you are driving the car, we are just sitting in the back seat providing you money, and if you need help, you can turn around and ask the backseat person, but you are in control. It's your house, it's your car. I think, and that's the best analogy here.
And also like what are my options for paying Noah?
Absolutely. So most of our customers, as I said, they have up to 10 years to pay Noah back, right, at the end of the term. At the end of the term, there are multiple options. The first is, if you decide to sell the house, you can sell your house and Noah will get paid from the sale proceeds of the escrow. The second option is, if your cash flow situation is better, you have a better financial profile, you can do a traditional mortgage refinance and use the refinance proceeds to buy Noah out. Option 3 is you may decide to take any other type of secured or unsecured loan or debt to buy Noah's position in the house over. Option 4 is you can also roll over a Noah contract. So at the end of 10 years, you can pay us a portion of the money that is due, and the remaining can be rolled into another new Noah contract for another 10 years. And that way you have a 20-year relationship with us. So these are the 4 existing options you have. And one of the things that Noah is working on is eventually launching another financial product, which is more similar to a mortgage or anything else, which will allow you to convert from a traditional product to a Noah mortgage as well in the future. So I think in the next 10 years, you'll definitely have 5 options, if not 50 options, if you work with Noah today.
Cool. If I convert my garage to a 1-bedroom and 1 bathroom, will it have negative impact on my house value? Would it be harder to sell later? In this case, should I expand my house and add the bedroom instead? I mean, really, like, I would say it really depends, right? When you're trying to sell your house, it's the buyer they make the call. So it depends on where is your house and also like what's the current condition of your house. Like when the buyer is trying to buy, as long as it's legalized, like it depends on like whether they like the design or like it's just really case by case. But rule of thumb is that if you say you're gonna keep that property for a really, really long time, like say 10 years, and the the rent can make that worth it, then do it. And then later you can convert back too, right? Adding something would not decrease your value. It would just like not add too much like a positive value, but the worst case is like probably stay the same. That's my opinion. So if you're really thinking about how to convert it, let me know your specific address so I can give you really like customized opinion on there. I wouldn't recommend all the people to do to convert that because, as I said, if you're in Cupertino or Los Gatos, the house looks really nice. You don't want to, for that rental income, ruin the design or make it really like impact, like a compact. That way it's not gonna increase your money wouldn't be used wise. So send me your questions later. What kind of license does Noah hold with the state of California? Lender license?
No, so Noah is not a lender, so we don't have a lender's license. We have a California real estate, DRE license with the state of California because Noah is making a real estate investment in your home. You can actually go to the California DRE website and search for Noah, or you can search for Patch Homes, which was our prior name. And you can see, we've been a licensed real estate broker for the past 4 years. And as of today, our license is under the name of Max Diaz, who is the US managing broker for Noah, overall as well.
Let's say I buy a 500K property in cash. Now I want to put a prefab small home on it for vacation or rental. How would Noah work in this scenario with no home already on the land?
Oh, interesting. So like if there is no home on the land, then it is difficult for us to finance because there is no physical structure, right? Noah does not invest in land. We invest in homes and partner with homeowners. So the best way would be if you can, if you have the home on there, then we can finance it, but we don't finance any land as such.
Okay, let's do one last question because we're at 12. If you have more questions, feel free to email us, support at eano.co. And if you have any questions, please email to Sahil at noah.co.
Yes.
How well do ADUs appreciate? Do you want to talk about it?
Yes, I think so. At the end of the day, right? I think all of us will agree that there is no magic bullet for appreciation, right? If there was a magic bullet, everybody would do it. But the primary reason, and I think Stella's done a fantastic job here, you should build an ADU because if you need the extra space, you want to leverage that extra space for either living yourself or generating income. In most cases, I think ADUs do add value to the home, especially in California, because they're increasing the square footage. I think if it is an attached ADU, that's better because then it's part of the main home. If it is detached, I think it still has value, but the thing to do with detached ADUs is you want to make sure there is at least a bathroom in there, right? You don't want a room standing in your garden, in the backyard, because then it's not livable. But if you make a big enough ADU that has a bathroom, has a small, say wet bar or a kitchenette, it definitely adds value to the home. And that's been our experience, in general. We have worked with many homeowners who've used NOAH financing for ADUs and home improvements. And in most of those cases, they've seen 5, 10, 15% home appreciation within, say, 1 to 2 years of the investment itself.
Okay. That's a great answer. So when you're trying to sell, you guys will need an appraisal to come to
Yes. Yes, and the appraiser always takes into account ADU as well, right? And the one other tip I will give to all homeowners here, if you are selling or refinancing your house and you have an ADU, please get a full 1004 appraisal. Do not get a desktop valuation. Do not get an AVM. Insist on a full 1004 appraisal, especially if you have an ADU, because a full 1004 appraisal will capture the value of an ADU, which a desktop underwriter will never capture. So keep that in mind as well.
Cool. All right. Thanks for everyone coming. This first time co-marketing event with NOAH. If you have more questions, please send us the email. We will answer you. We will answer everyone here.
Absolutely. And thank you so much, Stella, and Echo for organizing this, and thank you, Amy, as well. And and from NOAH's perspective, you can go to noah.co. We have a home advisory team. You can call us, and we'll answer all your questions as well.
All right.
Thank you, everyone.
Thanks. Bye.
Bye.